Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein of Linn & Associates with your financial market wrap-up. And this is for Monday, the 12th of June, 2017, about 3:30 p.m. Central Daylight Time. I should go home. I'm forgetting phone numbers today. I sat on a cord to do my morning subscriber video wrong. I started redoing these charts, especially in the grain and the metals. It took me forever. It's a nightmare day. You ever have one of those where you just feel you should go right back to bed? I'm in that. No, it's not the markets because I'm not trading that much for my clients in front of an FOMC meeting. It's just that bad day. All right, let's go to the charts and get a feel for it. On the weekly chart for this week, we're down at this point about 24 points. And because it's 3:30, the settlement prices are already in. Yeah, they're going to trade a bit more, but that's it. You can't argue that you're still in an upthrust. And as much as people say, oh, the markets are breaking, that's probably more true of the NASDAQ than it is of the Dow. This is a small pullback on the Dow. When we go to a daily area chart of closes, I told you I did things wrong today. Daily area, it's not one word. The market has got still an upthrust in it, and this is just a minor back off from that high close. When we go to a daily bar chart, looking at it just on the bars, I think you'd agree you got an inside day, but here's what I'd be paying attention to, yesterday's lows. The lows on Friday were an outside day up day. When you have that, if you take out the low of that day within 2 business days, I view that as a bull trap, and often, I can't use the word always, often, prices make a run back for the 18-day average of closes. Now, we'll get to that in a minute. Here you've got a market with higher lows, higher highs. Okay. Now I put the 18-day average. That's the number I don't want to see. If you hit 21,024, you no longer have the pattern of higher lows and higher highs. In fact, with the current action, you could end up with lower highs and lower lows. You're at a real important juncture on this market, and it happened with the market making a run that didn't hit again this upper Bollinger Band. Now, what's the importance of that? Well, the Bollinger Bands are expanding away from the market as the market's pretty much going sideways. So that tells me that there's some type of divergence going on in the market. It's not buying into what's going on. That's interesting when that occurs. You know, it's almost like you had that big break here. Do you remember that? And it lasted all of 48 hours, and then you went on to make new highs. Well, that's the pattern we're in. Is this breaking away and ready to keep going, or is this telling us a different story? In the Dow, what I'm counting on is that you've kept the bullish embedded reading. Lose that reading, even intraday. In order to lose it, you might have to take out that low. That could be the tip-off that this market wants to head back to the 21,000 level. I don't know. Right now, do you bet on the bear side? Of course not. You're over the 18-day average. Your bias is up. You have the embedded reading. You're a buyer until it's lost. That's what I teach. Doesn't mean I'm right on that, and I'm certainly not telling you what to do because I don't put out trade recommendations here. I can talk about what I teach in my charting course. In the NASDAQ, you have a whole different world. You got a higher high, a lower low, outside day down, getting immediate big follow-through, and on the first day of this, of losing the embedded reading, the first day, watch this next day, you already hit the 18-day average. So the question is, are you making a run for the lower Bollinger Band? Well, the momentum's there. You're not trending because you have a higher high and lower low, but you certainly have a lot of downside bias. And the only way you can prove that the bears haven't grabbed temporary control, minimum, is to take out this high that you made on Friday by tomorrow. Otherwise, you've got a whole new type of chart setting up here, and it's got a bearish bent to it, not a bullish bent. But we keep hearing on the news that the FANG stocks are out of kilter, that another brokerage firm or an analyst firm came out and said Apple not the place to be. Tech stocks overdone. In my newsletter today, I wrote part of the Goldman Sachs report that they had put out where they think that the techs are way ahead of themselves again. So that you're seeing there. When we look at the E-mini, which is 7.5% made out of that, interesting, and here's what bothers me. You lost the embedded reading on the close today. That doesn't mean it can't get it back, but why should this market rally big on Tuesday or Wednesday in front of the FOMC announcement? Admittedly, Wednesday's a half day because then we get the announcement and then the press conference. But this market, is it just money coming out wanting to see what the Fed says? It could be. But there's a definite warning sign in this index not to be in it if you're a trend trader because it's not trending right now. The Russell is trending. Gee, this is the market that got beaten up and left behind again as the techs moved, and all of a sudden it's a market that's very much in favor at this point. And as you can see, battling up at the upper Bollinger Band. Unlike all the other indices, it's at the top part in an uptrend, but is overbought and cannot embed under this look. In the VIX, each time we get over this green line, which is the 100-day moving average of closes, it's brief. We don't seem to be able to stay over it. Admittedly, back here it lasted a bit longer, but in the end it went down and made new lows. Is this a change? What we can see is in the black dashed lines how sideways they're going. Those are the Bollinger Bands. And what the market did is with this surge that we had, and it ended up about here where I covered it with that name, it expanded everything out, and all that's going on is all this sideways action, but momentum is up. And I don't know where that could kick this market, but would you want to be short volatility in front of the Fed? Well, maybe that's what some people are doing. In the T-bond market, I was expecting more of a break, to be honest, going into an FOMC meeting. Remember, this is an inversion market. The lower futures go, not the higher. The lower they go, the higher real rates are going. This is a minor correction where you've got a market that's turned the swing line down with today's action. Lower highs, lower lows. That's bearish. The market lost its embedded reading right here this next day, on Thursday of last week. When you lose the embedded reading, unless you gain it back immediately, that's an indicator that price and the 18-day average are going to make a run for each other. Here's Friday's action. Here's today. I don't feel that I'm in the wrong camp in saying that I think that price and the 18-day average are making that run at each other. But because you're over the 18-day average, it's not a trend. It's a market that's lost a trend, and the two coming together because I consider this the line in the sand, the neutral point on the chart where the market decides what to do. The same thing can be said of the 10-year. Now, let's take a look at this because it is different. You're embedded. Right here, you're still embedded. You lose the embedded reading. I'm looking for price in the 18-day average, the 126 level. The market doesn't hit it yesterday. That's Friday, rather. Yeah, Friday, yesterday. But where does it go today? Makes a run. I don't know if this low is 126.06 or not, but it's darn close. I'm still thinking they're going to come together. Dollar index. Remember that line in the sand, the 18-day average of closes. You're right there going into the FOMC meeting, and you're getting a flattening out of Bollinger Bands. So they're starting to go sideways. As they should in front of that as the market decides what's next. You're now into neutral territory of the 18-day average, but trending down in the euro. You've got lower highs, lower lows. This market is bearish with momentum turning down, all three elements. So you either have to close back over the 18-day average to just negate the momentum, the bias, if you will, but you'd have to take out this number up here, 112.94.5, in order to even negate the swing line. You couldn't turn it up from that level. So the bears grabbed control of this market. British pound, bears are in control. And what is now the support? The 100-day moving average of closes. You came down to it, you bounced, you went back and tried to get into the Bollinger Band today. Couldn't do that. The problems there are that Miss May, the Prime Minister is having serious issues putting together even a good minority government. It is so fragile it may not hold together, and that is what she's facing, and that's what you're seeing right here. The idea that maybe a softer Brexit may be good for the pound is one thing, but if they can't get a government together to negotiate any deal and get it through Parliament, watch out, and that's part of what you're seeing there right now. In the Japanese yen, what is the trend? It's up. You got higher lows, higher highs. You're over the 18-day average. Admittedly, you're overbought. You have a 70 reading, but this is the market that's one of those plays that traders run to when they don't know what's going on in other currencies and they want to spread one versus the other. It's often that one. In the crude market, you got your embedded reading. Let's see. Both numbers are under 20 today. Both numbers are under 20 on Friday, and both numbers were under 20 on Thursday. So you have an embedded reading, which means further rallies until that red line gets over 20 are sell opportunities. So as much as you hear that, oh, OPEC's doing everything to hold itself together, even Nigeria lost another 255,000 barrels a day over the weekend of production that they say won't come on until the end of June again, not having any real lasting opportunity in the crude at this point. Gasoline market. Does this look like summer driving is using up all those stocks? I don't think so. And you're getting an embedded reading here. This market's still acting very bearish, not bullish at all. Now, one of the markets that we keep hearing about is natural gas because the U.S. is trying to expand its markets, especially to Europe. I believe our first cargoes went to Europe. I don't even remember the last time we sent any. I don't know if it was before this. Poland, Netherlands. That's important because that cuts into the Russian, if you will, chokehold that they have on those countries. And if we can get the permits done in America, this becomes a huge market. What do I mean by permits? You know how long it takes to get one of these plants up and going? I hear 5 years in the press. Not because they can't get it up and going quickly, government permits. President Trump, Mr. Perry, our Secretary of Energy, come on, open these markets. We've got plenty of nat gas. We're an exporter now. And this market, well, it's fighting a battle. It's under the 18-day average, so the bias is down. The market has a swing line. It's got higher lows, higher highs. That part is up, but you have an embedded reading. That is bearish. So this market still in the bear camp. Would you have thought that coming in today, hearing 95-degree weather for about a week, going from the center of the country right now to the East Coast? Normally not, and here you are down. Very, very interesting. But that's what you use with charts. You look at charts because they are your guide to the roadmap that's going on. The temperatures, they're known, for example. They're going to change. I don't know what they're going to be, but they're going to change. The chart action is the summation of all that thinking. And that's where the money is being placed on. Is the market going to get a bullish bias, a bearish one? Is it going to change? Well, all these indicators that I talk about and a whole host of other ones are there for you. And we make them available in 2 booklets that you can get by either calling us at 866-973-2077. You can go to our website and sign up for it. You'll see a carousel of free offers and guide to technical indicators is there. You can click right up here. At any point, if you see me on YouTube, there's an icon. Click on that, and it'll bring you to our forums underneath us. You'll see, click here for Ira Epstein's free offers on a number of websites. I'm Ira. Glad my trading day is done. You have a good one, and I'll see you tomorrow.